Welcome, ladies and gentlemen. How we doing? It's a little late, as you can see. Apologies for not uploading this video a little bit earlier. Now, let's get into it. Let's talk about 1, today's trades, 2, yesterday's trades, 3, the 2-3 weeks prior to today. Let's talk about tomorrow, and then next week. 5 different things. Alright, let's start with today. First off, in terms of what we hopped into in the morning live stream on the public, we got into some calls down here and told everybody hop into the calls. We wanted a higher high. You actually gapped up. We predicted you gapping up. And since you started falling already, we were thinking, all right, allow this to go below the 200 next to this golden zone. And let's buy right back into the calls, just like how we did over here. And that's pretty much exactly what we did here. Sold out at around 50-60%. They ended up going 100%. We told everybody, look at the downside. You're at a purple area now. And just like that, right back down to the bottom. Then you already know, back into calls. It ran up to the midpoint, right there, that line right there. Right back down to what point? The next midpoint, then a little bit lower. And then you ran right back into the purple, everybody. So, again, we played the calls down here going into the purple. Tomorrow, we're just going to play the calls above the yellow. Play the puts below the purple. See if this can get up here and holds us on top, right? If it can hold on top, easily just play the calls right on top of it again, right? If you start getting shut down, just play the puts going right back below into the 200 moving average. And that's all for this chart. That's the only thing you have to do. Now, if we're talking about yesterday, as you can see, we bought the calls right there at the bottom. Over here as well, bought the calls right there at the bottom, bought the calls right there at the bottom. I kid you not, every single day it was phenomenal. If you watch the lives, as well as watch the private lives, you'll see exactly what we did and how we did it and why we thought of that way. You can see the little text bubbles and they kind of explain it, but obviously during the live it would have explained it a little bit better. Off the top of my head, the only thing I can tell you was 200 moving average, the color zones, EMAs, and my other charts. That's the only thing I can really say, you know? So aside from this, again, over here we had bought the calls right after you crashed out the sky for FOMC. We told everybody this next day, because you did this over here in November, low, you fall out the sky, right? You hit that low right there, you run up here, and then you go lower the third day. So I was like, all right, everybody, you're going to go lower the third day, just like how you did last time. Minimum, if anything, you're gonna go 4 or 5 days, right? It ran up, it fell down here, we bought some calls and timed a nice $15 run right back up, ladies and gentlemen. It was amazing. So the next day we did the same thing again, hopped right back into the calls, right back up to the top, bought the puts up here, it fell down. We sold the puts a little bit early, and we pretty much didn't get into the puts this day because you weren't touching a purple zone. So that's why we got into the calls down here at the bottom and then just played that move instead. And as you can see, tomorrow, if you're below 584, simply put, puts right back down below, right? Aside from this, let's switch up and go into a different chart. I think you get the point of this chart here. Color to color, right? On reversal chart number 2, read all the colors here. And then you'll start to understand where we bought into the calls as well, just like the supply and demand zone chart. I also labeled this one. We bought right there, and then today was right here at the bottom. Let me circle it on this chart. Right here. Aside from those locations, we're just waiting for this to run to the top. We're going to play our reversal points tomorrow. Just like how the note says, locate all reversal points and play 3 to 5 day puts on 4 and number 5. And that's all you have to do tomorrow. These reversal points, they yield about a 50 to 200% gain. If you go around $3 to $5 in terms of a move on SPY, you're usually going to yield around 3 to 500%. So remember, that's in a day. If it's overnight, you're usually going to need around $7, $8 of a move in combination of that previous day plus the next low, just because of theta killing that value and the sideways price action that you get throughout the day. Unless, of course, you have a couple days out on the expiration, which is what I always suggest, right? Have at least 6 days, 5 days, and don't just average down on the same day, please. make sure you average into the play with a couple days of time. That's basically the safest way to kind of play this crazy market, right? Very volatile at times. So we have this next chart over here, chart number 7. It's simply telling you calls and then puts. 1 is calls, 2 is basically the puts. 1A, 2B, 2A, 1A, right? 1B. And I mean, yeah, just look at the chart here. It's very simple. Anything above 592, the bigger call plays. Anything below 585, straight puts to the downside tomorrow. So if we're below 584 tomorrow, again, everybody, puts to the downside. We'll have to fix this chart here. This chart was crazy. The reason why I need to create a video for this chart specifically is because we had timed every single perfect move about a week ahead of time. So we're going to make a video on how we did that. And then we're going to start editing it. This chart, same old stuff. Once you get below 583, 584 flat, straight puts to the downside, everybody. I still want to see if it's going to hold here and pop, though. SPY loves to, give us the most randomest pops in the worlds, or the worlds. But the world, and then, the drops tends to be very, very random. But due to us predicting a lot of these moves throughout the whole entire year, it pretty much is just repeating itself, honestly. So it's not too hard, at least in terms of where we're currently at right now, right? Like, for instance, think of it like this, right? It's just flow. So if you're flowing down here, you're most likely going to go here a little bit more possibly, and then you're going to flow upwards, right? Just like to the downside. That's how markets move. So make sure you're not so tense with the boxes and with the lines and with the levels. Remember, your levels are not tense. They're supposed to be a range. Just like this over here, right? Puts below 601.30, you end up going a little bit higher than that, 602.50, and then you collapse to the floor. $20 drop nonetheless, but still you went a little bit above it. And for this chart as well, this is one of my favorite charts, as you can see. Pretty simple. We just buying calls at the bottom here, and anytime it drops below, we're just going to buy the puts. Again, this is for the bigger range, bigger trend, as you can see here. That just confused the life out. I don't know how I just zoomed in like that. That just like messed up my whole perspective. I don't know if y'all saw that. All right, but so as you can see, these are all your levels right here that you want to crash down to, and my low is basically all the way down here at 331, 364s. We'll go to the next chart here. Your bigger chart again. Every single drop from the top we timed. We just want to see if this is going to actually yield something greater than just this drop right here, or that red line right there, because obviously that's basically telling you this is going to turn red here. So if for whatever reason you're under 584, 84, everybody, this is structure. Remember, puts anywhere below this point. Anywhere above 589 calls. Keep it simple, everybody. Just like that. Next chart. This is the simple YouTube chart. Just a bunch of wedges, right? And a bunch of price, like, paths and stuff like that. And by the way, all the wedges, they're all just recent wedges, as you can see. Just new data. And you hit this one here. Or you created it here. You hit it here. So tomorrow we'll just see if you're going to hit it again and then run up. I want to see if you're going to hit this upper portion. Either at 606 or point blank at 601. Next chart. This is one of my favorite charts, ladies and gentlemen. Make sure you take a picture of this if you can. I have a better version of it, so you'll see in a second. But anywhere below this big box right here that's colored, you buy the calls. Anywhere above it, you buy the puts. And look how it works out, right? Absolutely phenomenal. Look, even when it hit the bottom right here, first call play 90 days out. And then I changed it to a 8 to 10 day call play, because I was just like, wait a second, that thing happens. It can happen quick, and if we can get a closer dated option, we're going to get a higher percent, right? Of course, you want to play safe, right? But again, 8 to 16 days is the safe number, especially when, I mean, just look at this. Within one day, you had done almost the whole entire drop straight back down. So, again, puts at the top, calls at the bottom, keep it simple, that's it. We'll go look at the other charts now, right? These are the other charts I wanted to show you. So again, this is a little bit of like wedges and, you know, kind of like displaying different areas. This one, not really too much to say about it. Just the fact that we have some backup levels just in case you gap down. This one's not that important. This is the important one, right? Simple as this, everybody. Look how amazing this is. This tells you every single level, every single call play, every single put play, and I mean, you just tell me if it works. Look at the left side, right? We had done this the day before and just moved it over to the right. I mean, look at this, calls to this put play, and then you fall down to here, put straight back down to down here, where you fall down even lower. You hit the call play, right back up to the put play, where you stop right here. Look how perfectly wicks into there. Right back down. So this is getting kind of scary, and I want to just build on top of it, really. That's the only thing. And that's really all. Look at that. And then if we pop back below here again, it's over. Puts. Puts, puts, puts. If we're back above this line again, average down, it's call time. Aside from this level, or this chart, we have this chart over here. This chart is beautiful. Look at it. Absolutely phenomenal. If you get below this level again, 584 puts. Anywhere above, calls straight to 588, 14, and then 595. I want to see if the markets, the whole entire markets, could run up to 602. It really does look like it's going to pop up into this section here, no matter what chart I look at or what chart I show you and display. It looks like that's the first main target. So that's my first main target of the year. After that, drop straight down, run up, maybe run up again. And then this is the fifth target of the year, or this is the fifth target. Oh no, sixth target. Sorry, that's the sixth target up here, or this is the sixth target. This will be the fifth. That's what I'm thinking. It's just gonna do, you know, something a little messy here. You can also get this as the 4th reaction. So let me actually do that now. That could also be your 4th reaction. So we'll see. Take it slow. Go on to the next chart. This chart's phenomenal. This chart's basically your, it's like a cannon. That's what it reminds me of. Let me show you. As you can see, it's just a cannon straight from the left with the with a little ass wheel on it, right? And as you can see, if we slip below this at any point, we always have horizontal lines to make up for the diagonals. So boom, just like that. Anywhere below 584.66, I'm telling y'all, 584s put straight to the downside. Next chart. This one's a little too messy, so I'm not really going to hang here too long. But, I mean, just look at these plays here. Halfway point. Oh, no. Quarter point, halfway point, full point, next point. And then look, this is when it gets on top. That's what it's going to look like. And that is all, everybody. Again, we'll see if we hold this area here and start popping up to the next high, where we could then fall out the sky into the new low. Aside from this, everybody, we're just going to look at Euro USD now. We got some longs right here at the bottom after you collapsed out the sky. I'm not going to really hang on this or, you know, dwell upon this too much. I mean, you have your targets here. You can all see them. I'll go on the 1 hour so you can see why I made those targets. Using the last low right here to the left, just made a bunch of wedging lines. And yeah, just want to see if it's going to hit this next area. When you hit the low last time, you ended up pulling up higher, almost as high as the highs of the last high before the drop, right? So again, this is the high before the last drop, which means you should at least be able to pull up to this level right here on Euro USD before we collapse any other direction. So that's exactly what I'm doing. All 3 of these accounts are up about $10 each, the little baby accounts. And we're just waiting for the 50-cent account to come into play because we got that one a little too early. Aside from that, going to Microsoft here, we're going to wait for this to pop inside the box here at 435, and then we're going to continue to play the call side, just like we did at the bottom here. We had made around $2,000 just playing around 400 per day on just Microsoft last month. So we're just going to do the same thing this month. $100 to $500 per week on Microsoft. That's the idea. SPY, we end up making around 100 to 200 per day, just to give you an idea as well. With that on top of Microsoft, that's easily around 1,000 to 1,500 per week. Again, just following along with the simple trades, simple callouts, simple alerts, right? Nvidia, we said if it holds at this zone right here at 135, you could play to the little red area right here where you could then play the puts right back down. And I mean, look, ladies and gentlemen, ran up to there, fell right back down. Of course, it ran back on top, but that's besides the point. The main idea is that you hit the area and you collapsed because this was a red circle. Now, once you get above the red circle, straight to the white circle. So again, we even had something in preparation of you breaking out of this level, just like we did with the downside. Always prepared for both directions every time, no matter when, which is why we play the market so perfectly. It's truly an unbiased, like, perfect play style. Aside from this, go to Tesla. We got the calls right here at the bottom. We bought them over here, went 1,000% here. We bought the puts here, ended up getting a little bit a steamrolled again. We bought them way too short. That was the thing, because this was Thursday, and Friday was right here. We should have bought them for next week, and boom, it would have been good. So, yeah. Tomorrow we have 1 day calls, and then we have 2 week calls as well. You see, learning our lesson. And then when we start dropping out the sky, this time we'll go with maybe 3 week puts, 4 week puts, as well as 2 week puts, and maybe 2 day, 1 day calls, right? If it's a Friday or Thursday. Again, just to play the quick moves, because sometimes you get these really fast moves on Tesla. Aside from that, everybody, in terms of any other levels, any other plays, join up on the Patreon, join up on the Discord, have one-on-ones every single day, every single week. We're here live from market open to market close, as well as even earlier. As you can see, it's 2 a.m., 3 a.m. right now. We're also here after hours doing one-on-ones if you ever need that help.